Nvidia reported blowout Q3 numbers, but the stock slipped along with the broader AI trade. We'll go through the numbers on today's video and take you through the earnings that weren't enough to pick up Wall Street. Amazon is having trouble shipping its custom silicon that was meant to be inside of data centers and used almost exclusively by Anthropic. What does this mean for Anthropic? What does it mean for Amazon? And what does it mean for another stock that's not in the Mag 7, but is quickly approaching that? Google has soared to a $3.5 trillion valuation after releasing a model called Gemini 3. It now has Sam Altman and crew over at OpenAI worried. We'll discuss what that means for Microsoft and other companies relying on those cloud deals. And we are backing up the truck on one of these stocks, and it's the one that we kick things off with, and that is Meta Platforms. Start of the week at 6:06. Are we finally basing out after Meta Platforms is in full-blown correction mode, down 19% over the past year, has erased all the gains that you've made year to date? We swipe down on the Tesla and are backing it up on Meta shares, and I'll show that to you here more in a moment when we get to the technical segment. This comes as the company is rolling out AI, and this is going to be a theme as we move into next year. And I believe Google is proving this out before our eyes, that yes, there are differences between the models and that Gemini 3 is the best, and maybe Grok 4.1, which was rolled out, is also quite good. I'm sure we'll get an update from ChatGPT, which will keep it pace with the rest of them. But the one thing that separates companies, particularly as we compare OpenAI to the rest of these companies, is something called distribution. It's going to be one thing to have a good large language model or the best large language model, but if you pair it with distribution, which only a couple of these companies actually have, then that gives you a leg up on the competition. As we know, Google has elite level distribution through Gmail and obviously search and other applications. And maybe even better than that is Meta. They're going to bring an AI powered morning briefing to your feed over on Facebook, and I'm assuming if it works out over there, it'll cross over into Instagram. This is going to push custom updates to its users, essentially creating a personalized daily briefing of content directly to you. You can imagine a company that relies almost exclusively on advertising for its revenue. You probably will get fed some converting offers inside of there, and this is one way Meta is going to turn AI into dollar bills. Obviously, to convert AI into dollar bills, you need a lot of GPUs, and those are power hungry. We've reported on this in the past that Meta is potentially getting into power trading to fuel its AI energy needs. This comes as its partners inside of the data center and co-locations and all those types of things. They need to work out power negotiations, and Meta, being a large company, looks like they're wanting to make those negotiations in behalf of them. We are seeing a massive rejig inside of Meta. You definitely have Mark Zuckerberg at the top. He made those big acqui-hires over the past couple of months. We haven't really seen any groundbreaking products, and I think part of that is inside the company environment, with executives butting heads and some leaving. A revenue chief is now exiting the company. Chief AI scientists also going to depart the company. They were at the company for 12 years. I believe Meta has the distribution. Eventually, they'll have the AI chops and the large language model to pair with this type of stuff. They obviously have elite level sources of data, with people just posting freely on their websites 24 hours a day, 7 days a week. It'd be hard to screw this up. And there's a lot of ways where Meta could look a lot like Google in just a couple of months. Now, they got a favorable ruling inside of a courtroom, as Meta's Instagram and WhatsApp were basically being accused of having a monopoly by the Federal Trade Commission. Thankfully, the judge ruled that they don't create a social media monopoly among those, and I think that is a fair argument considering you have TikTok and other alternatives. Moving on to the stock that just doesn't want to go down. That is Apple. Start of the week at 268. They don't have really an AI strategy, but they've got one of the greatest AI devices, and that is the iPhone. Up about 1% this week to finish the week at 271. You got to look at this one technically. This comes as we potentially have succession planning for CEO Tim Cook. Many of you know that I call for CEOs to get fired. In the past, I called for the Boeing CEO to get fired. He got fired. I called for 2 Intel CEOs, 2 different ones, to get fired, and they're both out of a job. I called for the Nike CEO to get fired. He's also gotten fired. I called for the Google CEO to get fired, and he did a fat DX chop on me, and he says, no, in fact, Google stock going to an all-time high. I also called for Meta's Mark Zuckerberg to get fired. He's still at the job, and I'm rooting for him. I don't think I can take full credit for saying Tim Cook should get fired, but if he leaves the company, I believe this wasn't voluntarily, and I think he's being driven out. This comes as the company has a overhaul of their iPhone strategy. As most of you know, they come out with these models in late fall, just a couple of months ago, and they come out with the phones at the same time of year, every single year, and it's been like that way for a very long time. Well, they're going to mix up the cadence. They're still going to release their flagship phones before the holiday shopping season here in the United States and around the world, but they are likely to release other phones, including an E version and maybe another iPhone Air version arriving at a different time, potentially 6 months later. So essentially every 6 months, there'll be a new iPhone on the shelf for maybe people that want to upgrade a little bit sooner or don't want to wait all the way into the fall season. This could change some revenue estimates and potentially revenue opportunities for Apple, and that could be something that is driving the shares basically to all-time highs. The iPhone Air designer, though, abruptly left the company as he's reportedly resigned. As you not just have executive shakeup over at Meta, but Apple as well. Moving on to Amazon. Start of the week at 231. This one drifting lower by about 5%, and it takes some digging to understand really clearly why. Now, one of the things they did this week is they raised $15 billion in one of its first bond sales since 2022. You might ask yourself, were investors lining up to give Amazon $15 billion? And the resounding answer to that question is, oh, hell yeah. The bond attracted $80 billion, $80 billion of demand at its peak. So Amazon easily raising $15 billion, and they're obviously going to turn around, invest a lot of that money in the data center. Now, speaking of investing, Jeff Bezos created a new AI startup that he's calling Project Prometheus. That company came with $6.2 billion worth of funding, and it'll obviously be interesting to see. We've seen some integration with like Grok inside of the Tesla. If you have a Tesla, you can kind of like access that. Obviously, that's 2 separate companies, but it's marrying one Elon Musk company with another. It'll be interesting to see going forward with Jeff Bezos. Obviously, he's launching those rockets into space, or he's launching Katy Perry into space. Eventually, we're assuming instead of pop stars going to space, he's going to be launching the satellite system that Amazon is trying to develop. So what Jeff Bezos works on the side could eventually come into Amazon and help it to a certain degree. That's probably one of his plans, and we'll obviously keep track of his new AI efforts. Now, you've got to dig around on the internet to find some amazing sources. And some of you probably are going to say, Colin, who the heck is this account that's got 2,000 followers? And why are we talking about it? Well, if you notice, some of its followers, you might not recognize a couple of these names, but Mr. Mark Andreessen is one of this account's 2,000 followers, and this is one that you might want to check out. Mr. AYZ_YZYZ. Coming with the heat that Amazon Trainium 3, which is its custom silicon. As most of you know, when we talk about Google, we're talking about their custom TPUs. It's in its, I think, 7th or 8th generation by now. They partner with Broadcom on that. Amazon is on its 3rd generation called Trainium 3. This was meant to go into a large data center that Anthropic was going to have access to and really be the lead customer. Having your own silicon is obviously cheaper. When we get to Nvidia, we'll see their gross margins and their profit. You don't have to pay that. You just have have to pay a much smaller and thinner profit margin that Broadcom is willing to operate under. But with Trainium 3, Amazon was working with Marvell and another company. And in my experience, people always asking me, why aren't you talking about Marvell? Why don't you ever recommend Marvell? That is because when I get deep in the weeds, the company isn't as good. It's not as good as Broadcom. And that's what we're seeing here. They had a redesign issue again, delay the chip, and delays at this stage of the game are not good. When AMD is firing on all cylinders, when Nvidia is clearly the Michael Jordan of the GPU business, you can't miss your shot when you have a window to release your chip. If you don't release it, well, Nvidia is on a yearly cadence, and we don't expect them to miss. AMD also on a yearly cadence of releasing chips. We don't expect them to miss. If you get delayed, then all of a sudden, by the time your chip makes it into data center, it's already obsolete. So Amazon doing something that we might hear about in a couple of weeks when Broadcom makes their call, that they've introduced Broadcom into its Trainium 3 supply chain. We'll see if that adds to a customer over there. Now, moving on to Netflix. Start of the week at 111, and that might seem a little bit low considering we've always talked about this share in the $1,000 range. Well, down 6% this week after the company executed a 10-for-1 stock split. This was on Monday. So you got 10 shares for every one that you owned. This stock is under pressure, though, as investors are fearing potentially maybe dilution from a share issuance or potentially debt and other types of things coming onto the balance sheet, which is otherwise more or less crystal clean for Netflix. This comes as the industry is bidding on Warner Brothers Discovery. The rumors were Netflix was taking that bid very seriously, and then we come out that the first round of bids are in. This includes Paramount, NBC Universal, and obviously Netflix, the usual players, as you'd expect here. I'm surprised one of these other players are not coming in, but there's antitrust concerns and getting the deal over the finish line. If you're an Amazon and you've already bought MGM, and companies like Apple, where it's not necessarily your core competency, and obviously Google with different types of TV assets, and YouTube might not be the perfect pairing. Netflix is accordingly or rumored to be interested in the streaming business and obviously gaining access to their extensive film library and obviously established TV and entertainment franchise. We'll see who ends up with this. It could be pieced out a little bit. It could be that NBC Universal comes in or one of these other companies come in and then Netflix gets a streaming deal from this. We'll see what happens, but a lot of news likely coming as those bids get finalized and the deal gets consummated. Moving on to the stock of the world. That is Nvidia. Start of the week at 187, and this one, after reporting earnings and popping in the after hours, and then sliding. This one down about 4.7% to finish the week at 178. We'll show it to you technically. Not a lot to worry about, at least right now. Revenues grew just 62.5% on a $4.4 trillion company, coming in at $57 billion. And here was the reacceleration of the data center business. Talked about this on the premium side when I did a video on them the day of earnings. You had $4 billion of addition on data center for many quarters. You'll know 18 to 22, 22 to 26. This is all $4 billion. We had a hiccup though. In Q1, we went from 39 up to just $41 billion. That is just $2 billion. And that could potentially had some investors concerned. However, those concerns were alleviated when Nvidia put up $10 billion of data center growth. We're not talking year over year. Year over year, I mean, we're up like $20 billion. But quarter over quarter, you bolted on $10 billion to the data center side. Now, the gaming business and the rest of the businesses are actually flying, but when you put up $51 billion in one segment, nothing else seems to matter. Now, as you can imagine, you're putting up that type of growth on already astronomical numbers and gross margins that are in the 75% range, which means for every dollar that comes into Nvidia, they collect 75%. And as you can imagine, when your product sells itself, you don't have to spend a lot on sales, general and administrative, and R&D, a big expense, but in relation to how much earnings they're getting, it's not that much. Net income coming in at $32 billion last quarter. It was just 19. I did see people on social media poking holes in the accounts receivable and the inventory line. The bottom line is when you have sales running this high and then potentially Nvidia may be absorbing some inventory on their balance sheet rather than going over to Dell or going over to Supermicro or going over to some of these other stocks that can't absorb that type of inventory. That's possible. We've also seen Satya Nadella, the CEO of Microsoft, say things in the past couple of weeks saying, I've got Nvidia GPUs that I can't even hook up. And so that could be contributing to inventory numbers, but more or less it's sales. I also want to point out, yes, people were pointing at this accounts receivable number and how this somehow is fraud, where you're up $10 billion year over year. I mean, these are almost rounding errors when we're talking about the value of this company. Here's the thing that you need to understand. We have 4 companies that we cover on a regular basis here: Meta, Amazon, Google, and Microsoft. If Nvidia said, you know what, does somebody want $51 billion of our data center chips? We have 4 companies that we cover on a regular basis that would have wrote a check for $51 billion and been the single customer instead of CoreWeave and Nebuous and all these other customers. One client that we cover every single week would have bought all $51 billion if Jensen Huang would have sold it to him. And Elon Musk would have probably figured out a way to get XAI $51 billion to buy him too. So we got no problems with the accounting. We got no problem with demand. And you've got customers that are still flush with cash and cash flow. Big announcement with Anthropic as they announced a partnership with Microsoft and Nvidia to invest in Anthropic and allow Anthropic to use its chips. This goes back to the story that we talked about with Amazon, in that their Trainium 3 chip was supposed to launch out into Anthropic's ecosystem. And because that got delayed, I think this triggered this partnership, which was probably already in the works. This helped put it over the finish line. What's just beginning, and we saw it with the Crown Prince visiting the United States, is that global AI, and often called sovereign AI or government AI, this is still very much in the early innings. We're still even in the early innings of corporations and businesses using this here in the United States, but certainly many of them are further along. All of these companies, obviously, but even the JP Morgans and those types of companies are massively far along. But when we look at sovereign governments, when we look at militaries, when we look at different geographical regions outside of the United States, a lot of them are just starting to pick up their investment, including Taiwan, which just launched a $1.4 billion supercomputing center with Nvidia GPUs inside. Now, big news coming late today that President Trump is probably correctly realizing that the United States stock market is on the shoulders of Nvidia and on the shoulders of Jensen Huang. And one way to maybe potentially juice the stock market, which we know the president pays very close attention to, and that actually means a lot to him, one way to juice it is to get H200 GPUs into China. Now, I saw some misinformation or just some misunderstandings online, and these were from very large accounts that had millions and millions of followers. Some people believe that Nvidia can't sell its chips into China because of President Trump or something here on the United States end. Here is what's happening, is the two countries have more or less agreed that Nvidia can ship GPUs into China. However, the state of China, the government of China, has decided and ordered its companies to not use or order Nvidia GPUs. Now, I'm not in China. I am not a citizen of China, but just based on where I sit and what I know about China is I would not want to be a business and go against the government. And so for the most part, you are seeing zero sales of Nvidia GPUs going into China. However, the H200 is far more competitive and probably more advanced than what they are getting there. Keep in mind, the H200 is the previous version, but it really doesn't matter what Trump wants to do. Doesn't matter what Nvidia wants to do. China plays the long game here, and I think they're willing to take a step back when it comes to the latest and greatest chips and develop their own thing homegrown. And I've said it all along. China's going to have their own AI. China's going to have their own quote unquote Nvidia, and America and probably the rest of the world will have something else. Moving on to the stock of the week. That is Google. Start of the week at $292 and just powering higher and higher, up 2.5% the finish week, right at $300. This comes as the great Warren Buffett's company, Berkshire Hathaway, took a $4.9 billion stake, essentially at all-time highs, we would assume, with Google. Now, as we know, the great Warren Buffett is taking a step away from his company, and I don't even think he's involved in really the day-to-day operations. I'm sure he has communications. I'm sure if you work there and you have the privilege of bouncing something off him, you definitely pick up the phone and make a call. We likely know that this is his staff, which are probably fully capable. If he's willing to put them in charge, my guess is these are some of the best of the best. But it'll be interesting to see after Warren Buffett completely steps away, the type of investments that they are willing to make. Google, now a Berkshire Hathaway owned company, and that's really interesting. I have a very interesting take on what they see with Google outside of search, outside of AI. I actually think the Buffett mindset applies to a different business with Google. We'll talk about that here just in a moment. But the big news for Google this week is they released Gemini 3, their latest AI model with vibe coding and other chatbots. Now, I haven't personally had a chance to play around with this. If you have and you're on the Gemini system, how much better is it than the previous one? I'd love to hear from you in the comments. I'm more on Anthropic. I'm more on Grok. And by far, we'll talk about Grok here in a second. These things are not, we're not getting leaps and bounds better, but we are getting noticeable improvements on these things, like on like a semi-quarterly basis type thing. Google absolutely pushing the bar, and I'll reframe what I said with Meta earlier. Yes, these AI models are important, but I guarantee you in a month or two, ChatGPT will come out with an update or a brand new model that'll be as good or better than this. But what ChatGPT doesn't have, what Anthropic doesn't have, certainly compared to Google and obviously compared to Meta as well, is distribution. That is going to become very, very important, and that is going to be the thing other than the models that these companies are going to have to compete against, and Google doing a great job at both. I saw universal high praise for Gemini 3. We'll talk about Sam Altman's comments here in a second, and that is driving shares higher. This comes as the company is monetizing this as well, as they are rolling out ads in AI mode. Now, this is not new. The company came out later and said, we are constantly testing this, and they're rolling out AI ads inside of that. I saw a news story this week that Google rolled out a travel shopping feature, and I saw the travel stocks sell off, and I was like, are these guys insane? Google is setting this up so the Expedia of the world and the hotels.com, they come in there and they bid on those results that the AI is going to get spitting out. So Google seamlessly layering an AI across their ecosystem, and it appears to be working. Here was a big story that I didn't see get covered a lot. Google executive internally to the company. So this wasn't like him getting on stage and hyping stuff. And they don't really have to do that if you're Google at this point. But internally on slides given to companies or employees at the company, they said that they must double their compute every 6 months. So that's a 1000x in 4 to 5 years. This is one of the first times I've seen one of these companies really stretch out several years in terms of their compute commitments. Obviously, this would be incredibly bullish for Broadcom and would go to my thesis where I think I started it a year ago, that the stock was likely to triple. I believe the stock has come close to a double, and I think we've got more room to go. And if Google is right that they are going to spend the next 4 to 5 years 1000xing their compute, then yeah, there's going to be a lot of companies benefiting. Now, one of the reasons why I think Berkshire Hathaway is interested in Google and is buying it at this moment is, as you know, Berkshire Hathaway invests in some of the most boring business, including the railroad. And the railroad, I believe, it's one of the greatest inventions of all time when we're talking about transportation. I think we're on the precipice and on the verge of the next greatest investment and invention when it comes to transportation. That is autonomous delivery of people and goods. And Waymo, which is a Google company, is at the forefront of that. If you're in the great city of Miami, you are now getting fully autonomous rides, and they're expanding very quickly to Dallas, Houston, San Antonio, and Orlando. It's amazing to me in the comments of my videos on social media how many of you don't believe or think this is something that is years and years and years away. I usually speak to it in the context of Uber, who is definitely 2 or 3 steps behind not only Waymo, but Tesla as well. They are trying to catch up through partnerships, but that's going to be expensive from a cash flow perspective and a profit sharing perspective. They also don't have the distribution that a Google has, and eventually Tesla as well. More competition in the space is not good for the incumbents. Just ask people that used to own yellow taxi cabs. Every major city is going to look like San Francisco. If you've had the privilege of visiting San Francisco more recently, it's certainly a little cleaner and a little safer. I'm not going to say you go out without your guard up in a city like that, but it's certainly gotten cleaned up a little bit. But one thing you'll notice is how many freaking Waymos there are, and they've just been allowed to get on the freeway. They've just been allowed to go from San Jose up to San Francisco. They've just been allowed to go into the airport. This is something that is expanding. It's expanding very quickly. And in 5 years, every major city from Miami to San Francisco to Los Angeles to London to New York City, they will look exactly like San Francisco on steroids, because you'll also have Tesla in that market. You'll have Amazon with Zoox. You'll have other competitors in there as well. And this is going to revolutionize transportation, revolutionize delivery, whether it's food or products or people. It's going to revolutionize things. And unless you start to wrap your head around this and you stop saying that this is Elon Musk's fantasy, it is happening now, and it is happening very, very quickly. And I think Berkshire Hathaway recognizes this, and this is part of their thesis. Moving on to Microsoft. Start of the week at 511. And you might say, on a week where Google hits all-time highs and even the rest of these stocks sliding just slightly, Microsoft had a really bad week. And there's some very specific reasons why. Down 7.6% the finished week at 472. This comes as an internal memo over at OpenAI has circulated, where Sam Altman is saying that the company is likely to face temporary economic headwinds from Google's AI progress. This is not good for OpenAI. It's not good for Oracle. It's not good for anybody at Microsoft. That is because the planned capacity that Microsoft is building out is based on projections and planned capacity from OpenAI. If the models start to attract users and the growth rate at OpenAI even hiccups just a little bit, well, that changes Azure demand. That changes downstream the contracts that Microsoft has signed. Now, can they replace that with the Anthropic deal that they announced earlier this week? Maybe. But if the Googles of the world keep gobbling up market share, then that's going to leave OpenAI and certainly Microsoft in a precarious position. The AI industry is on the back of Nvidia for sure, and they are delivering. But the AI industry, particularly when you look at the oracles, particularly when you look at Microsoft, is leveraged heavily to OpenAI. And if they don't deliver, if they're not able to compete, and it's going to be very difficult to compete, I believe they're going to be able to release models which are as good or slightly better than Google's Gemini. But what they don't have is distribution. What they don't have is YouTube. What they don't have is a way to get this into the fingertips of millions and millions and millions of people every single day. And in a lot of ways, have a multi-hundred billion, trillion-dollar ad business that you can comfortably layer on. OpenAI has to build all of that from scratch, and it's going to be difficult. I highlighted this on the great platform of X, talking about Oracle, Nebius, IREN. Also, you have CoreWeave as well, which are heavily levered to Microsoft, which again, Microsoft is signing these deals with Nebius and IREN in anticipation of growth over at OpenAI. If that OpenAI growth slows or stagnates or stalls, or worse yet, falls off a cliff, these companies are absolutely screwed. Microsoft will be fine, but the ones that have signed up for large deals and massive multi-billion-dollar cloud deals from OpenAI, those stocks That's already being priced in if you've seen the punishment in those names. Microsoft's going to backstop that demand a little bit by partnering with Anthropic, but we also know Anthropic has a deal with Amazon, and if they had Broadcom on the lead with their chips, they would be shipping them on time, and they probably wouldn't even need Microsoft. All of this stuff is weaving together, and I believe over the past year, you could have thrown dartboards at a data center stock list and you would have made money. You could have thrown dartboards at an AI company and probably made money. Those days are over. You have to understand how the ecosystem is working, who has deals with who, and how their distribution and their monetization strategy and their traffic strategy going forward, how that differs than the projections they made just months ago. You have to follow this very closely. It's no longer throwing darts at a board and hitting winners and making money. That's not going to be the case going forward. You're going to have to follow this very, very closely. Video game sales, which is a minority portion of Microsoft's business, but a big one, particularly here in the fourth quarter. Game sales up 3%. You obviously had that delay of Grand Theft Auto 6. I think we're all going to be grandpas by the time that game comes out, but we'll definitely fire it up and play it when it comes. Moving on to Tesla. Start of the week at 406. This one down about 4% to finish the week at 390. This comes as Elon Musk making amends with President Trump. They said some nasty things, or at least Elon Musk said some nasty things about Elon, and Trump probably said some things back that maybe both regret. Well, he visited the White House with the great soccer star Cristiano Ronaldo, among others, including the Saudi crown prince. They had dinner. Jensen Huang was there, many others. Obviously, Tesla had a massive kickstep after the president was elected and then had a massive fall off, but there was also some brand deterioration. Elon Musk trying to thread that needle, and we'll see what happens. His XAI company continues to raise money. We had this story last week, but I believe we have a higher valuation at $230 billion. We talk about Google, we talk about Meta, we talk about Amazon, we talk about Anthropic, but underneath the radar is Elon Musk, and I don't think he cares. I think he has a vendetta, and he does not like Sam Altman like a lot of people don't do. And this is more personal for Elon than it is about making money and building a big company. But he does have a huge competitive advantage. The X platform is a fire hose of data, and that is one thing that OpenAI doesn't have. Google has a fire hose of data where you're watching this video, and that is YouTube. Meta has a fire hose of data, and that is Instagram and Facebook and WhatsApp. They're going to be able to use that data in a lot of ways, lock out the competition, and make that proprietary to them. OpenAI and Anthropic don't have that. They also don't have massive distribution platforms like even a Twitter and certainly Meta's Facebook. The competition's heating up, and you've got to really pay attention. Now, the company released Grok 4.1 with higher speeds and quality versus previous versions. I can confirm that the results come out a lot faster. That was noticeable to me, and for the most part, it's a very capable model. I have used Grok almost as a replace to Google. So if I'm doing facts, or like I want facts, instead of searching Google and going to different websites and even using their AI summary, I go right to Grok, and it's like, hey, what was this deal? I know this company signed a deal in 2019. Tell me about it. And you press enter and you get all the facts. Many people in the news industry want to pit Waymo versus Tesla, or that Tesla's behind here, or the LiDAR technology on these Waymos is superior. In the end, I don't think it's really going to matter. I think this industry is going to swell very similar to how AI swelled at the end of, I guess it was like 2022 or 2023. All of a sudden, you had one company kind of come up, and it's dragged the rest of the industry, including the rest of the hyperscalers, into that industry. I think self-driving is going to be the same thing. Is Tesla going to be the dominant Michael Jordan, Nvidia, if you will, of self-driving? No. Is it going to be a massive player? Absolutely. Is it going to be able to license its software to other vehicle makers that don't want to develop that stack? Absolutely. Is it going to get their ride-hailing services into states that are much more faster about adopting this stuff, like Arizona? Yes. I saw rumors online that they're already testing in many other markets. So this is something that all of a sudden you're going to wake up one day and realize, well, robo-taxis are here, and you'll have to decide who that's good for and who it's not. Moving over to the technical segment of the show. We definitely peaked on the S&P 500 and we've been making a retracement. It's trying to find footing at these levels at 62 or 6,600 or so. You did confirm a new lower high. This is not great in the shorter term. The bulls are trying to defend this area and try to pull this one back up to an all-time high as we move into the rest of the year. The bears are going to want this to break. However, you do have support. The squiggly blue line down below is the 200-day moving average. It's just 200 points lower, which on a $6,000 index is not that much further. You should find some support. It's going to be difficult to chop through this on no news. However, you do have the liquidity concerns around Bitcoin and other speculative assets likely contributing to some of the struggles. This should make you excited, particularly if you missed the buying opportunity in April. The more this pulls back, you don't panic, you get excited. Now, one thing that you know of me is I'm a very simple man. I draw these technical lines in. And look, Meta's had some times where the stock has completely fallen apart. But basically since then, over the past 2 years, we've been in a very, very tight channel. And here we find ourselves at the bottom of the channel. And so you know what I do when you get to the bottom of the channel. Now, I'll admit, I started buying Meta on the initial move down. As most of you recall, they reported earnings and we dropped. And I started buying. And then we bought some more. And then I bought some more. And then I bought some more. And then this week, I backed up the Cybertruck and we bought a lot of it. Now, if you want to go really tight into the candles, clearly buyers stepped in here at 580 and they were defending that level because they are looking at the same chart as I do. I still get comments. I still hear from people on social media saying technical analysis doesn't matter and it's all voodoo and Miss Cleo type stuff. And I tell you, everybody's looking at the same chart. You're not making up anything when you're looking at a chart of price. And this is where the buyers will likely step in. If they don't, whatever. It's cost of doing business. If you do find footing here, you have upside from the 590s, likely all the way back into the 800s. Apple was in this position just months ago. Back in April, the stock was trading at the bottom of the trading range in May, in June, in July, and you probably can go back to the FAANG stock recap shows at that time, skip to the Apple segment, and hear me talk about accumulating shares. In fact, the premium subscribers over at Equity Empire, we had this on the buy range. You had the buy range. You had the buy alert. It was there. And now what has happened? We found footing at these levels and we clawed all the way back up here to 270. So we were at sub 200. Now we're up here at 270 with Apple. And those are areas where if you want to, you can take profits. Now, Amazon, very interesting. Technically, we have confirmed a new higher high. That is good. However, we broke through the previous highs, which is sometimes support. That'll be resistance on the way back up. But we are now sitting on the 200-day moving average. A break lower with Amazon, particularly down here into the 190s, is another back the truck up type moment. Whether or not we get that, we'll see over the next couple of weeks. They're obviously be in the news with their e-commerce business and e-commerce sales, but you're sitting at the 200-day moving average on Amazon, and that's not the worst spot. Now, Netflix is teetering. This is not performing well. We had been in a major uptrend with the stock, looking absolutely beautiful. And yes, with Netflix, I stepped in on the dip. However, we were not able to hold the bottom of the channel. In fact, we did a back test up to trend and then got rejected. This is not good. Doesn't mean it's the end, but this is a very well-defined shorter term downtrend in the shares of Netflix are absolutely making a series of lower highs, and we've confirmed more recently 2 lower lows. You want to have stop losses when you start a downtrend because I don't need to bring up stock charts of Adobe, PayPal, Enphase Energy, Lululemon, the starts of downtrends. You don't want any part of that. Now, I'm not saying that's necessarily going to happen with Netflix. More likely, this stock finds footing here, finds some consolidation, and starts a new shallower uptrend. That's what you're hoping for, but it hasn't materialized quite yet. Big candles and swings with Nvidia. As many of you know, in the after hours, this thing popped and came all the way back down. Nothing technically really exciting here. You have absolute support for the shares at like 175. Let's slap on a fixed range volume profile. I don't always do this, but this will give us some indication. Yeah, I mean, this is where all the buyers are with Nvidia. This area at 170, 180 is defended very, very well. It's converging now with the 200-day moving average. It's hard to say after these earnings that the company put up what's another catalyst that could move this thing higher. But this area is holding. If you don't want to lose money on Nvidia, you probably want to stop loss. I mean, it's a ways away, but you wouldn't want to get underneath the previous area of kind of support, which was down here at like 140, 150. You're going to be a little more aggressive than that. You don't want to get underneath essentially this cluster of lows at 160. These are for people that want to secure their profits. If you have a long-term vision and you believe what Google said, that you got 4 or 5 years of investment, I tell you what, Nvidia is going to make a lot of money over the next 4 to 5 years. Moving on to Google. This one's in outer space, guys. I mean, this one has gone straight parabolic. You are now over trend. Even a pullback will have support here. If you're just dying to get into Google, the pullback back to the top of the trend is your first area. Further back, I mean, obviously, it's pretty obvious what's happening there. Microsoft is completely broken a very key level. This level at 493 broke. That's not good. And it didn't just break it. It went right through it without hesitation. You even broke through the squiggly blue line is the 200-day moving average. You are now converging on the previous highs. This also acts as support. Remember, highs act as resistance. You hit the high at 460. And I mean, you went all the way back down to 350 on this one. And then when you bursted through the previous highs at 460, you went all the way up to 560. Now you're coming back and retesting this area. If you want to get into Microsoft, this can be an area. And if you want to protect yourself, just put a stop loss just below that. And some people are like, I can't do a stop loss. I can't sell a stock for loss. Think about this like running a business. You're going to spend money sometimes on a business and lose money. I ran an Amazon business for many years. I was doing like maybe $250,000, $300,000 in sales every year. It's a low margin business. It was a side hustle more than anything. But there were times I would buy inventory. It would get damaged. It would get returned. It will, something would happen. And like that was the cost of doing business. You mix that in. Cost of doing business sometimes with stocks is you buy them and they break through a stop loss and you sell them for a small loss. You want to sell Microsoft at a small loss, you want to have a stop loss underneath this level. You pick it out where here you do have a gap down here. The further lower you get, the higher odds, obviously, that the gap begins to fill. Moving on to Tesla. We found hard resistance up here. I mean, this stock got rejected hard up here at 480, but it's now converging. Middle of the channels often are resistance. That's why I slice these channels in the middle with a line. I usually want to make this a yellow line. So you think about this like a stoplight. Green means go, back up the truck. Yellow means maybe take your foot off the accelerator of the Model Y. And red is often an area where if you want to take profits, hit the brakes, get out of your car and go move on to a new investment, that's where you hit the brakes. This one's in kind of the medium zone. It's also converging with the 200-day moving average. That's a good sign from a support perspective. You break through that, it's probably going to be a violent move to the downside where you got opportunities under 300 on this one, which would be a good moment. Folks, that was the FAANG Stock Recap Show for Friday, November 21st. We'll be back in 7 days on the beautiful Black Friday. Get your Christmas list ready. Make sure you're on the good list and not the naughty list with Santa Claus. Get all the coupon codes. In fact, this is not a plug. I don't get paid for this. I don't have affiliate links, but I noticed TradingView was offering a Black Friday sale. If you're like me and you already are a member, you can extend your subscription. Keep in mind, they are not paying me to say this. I could have affiliate links to this. I don't need them. I just use TradingView. As you can see, I am more than willing to recommend stuff that if you want to do this stuff yourself, TradingView is a very worthy tool. And at least from where I'm sitting, it's $10 a month, which is nothing. The other site that you see me use constantly is Seeking Alpha. I'm on a rebuild here. I'm assuming they're going to run some kind of Black Friday deal. That's another site where I fully recommend this. paired with the mobile app. So the great thing about Seeking Alpha is you have your mobile phone, you come to stocks like Meta and you follow them. And then you can tailor what type of stuff you're getting. I don't typically get analysis. I don't even read a lot of the analysis here. You can do that if you want to and you feel like it helps you. Doesn't help me as an investor. I can analyze this stuff myself. But what I do get is all of these news that comes here, it comes right to my phone. So every single moment of the day, I'm getting fed the news of all the stocks. And this is why I can have such a high IQ of what's going on in the business, because every single day that alert is coming right to my phone and I'm reading headlines. And if it's a really juicy headline, you're clicking right in and you're reading that. So these are the two things. If you're going to do this stuff at home and you're going to do it yourself, I think Seeking Alpha paired with some chart platform, certainly worthy. Now, I've been asked a lot about Equity Empire, whether or not we are going to run some type of Black Friday sale. And the answer to that question is a no. The early subscribers got the best deal. The early subscribers are locked in. If you lock yourself in, I am never going to raise the price on you. And in fact, in 2026, we are going to raise the price. Many of you might not remember this or know this, but I spent a year at MarketWise, which is one of the largest companies from a financial newsletter perspective. And it got my name and my work out in front of over 500,000 people. And obviously we were early on the AI trade with Vertiv and Credo and Broadcom and AMD and recommending these stocks 200, 300, 400% ago. And so when we launched Equity Empire, a very large number of those people contacted, first of all, found me on LinkedIn, found me on X and signed up. And so we don't need to advertise. We don't need to discount. That is because we deliver for our clients. And yes, you probably follow social media influencers and people here on YouTube that have to put things on sale, that have to run discounts because their career is just beginning, because they don't have the reputation. But when you have the reputation that we do, we don't have to run sales. And we, in fact, will be raising the price going forward. That's because with every member that comes on comes customer service, websites, all that type of stuff. So the costs actually start to rise. So while I do appreciate people having interest in joining, wanting a discount and those types of things, I know that's customary this type of year. What I do say to people is I've never seen Rolex run a sale. I've never seen Louis Vuitton run a sale. And we are trying to make Equity Empire, the Louis Vuitton and the Rolex, where you're getting high quality and you get results. Is it worth it? I'll let you decide, but I'm grateful for everybody that has signed up. And obviously the hard work is just beginning. I believe the AI industry is in for a massive change in 2026. Investors are going to be starting to price in stuff that they didn't price in, demand peaking, OpenAI not being as big as it was, and all these types of data center deals. Some of them are going to be completely falling apart. If you're doing the research, I think you can make a lot of money just like we had over the past couple of years. But boy, you've got to put in the work. And that is something I wake up every single day and look forward to doing. Thanks to all of you. I get to come here every Friday. Thanks to all the subscribers. I get to do it at a very high level, and I appreciate all of you. I am thankful for all of you as we move into Thanksgiving. I hope you have a great time with your family if that's something you celebrate, and obviously gear up for Black Friday. Maybe there's some cool sales at Nike and other places, and I hope you get what you want and get a good deal. We'll see you again next week. We'll be back in 7 days. Good luck with your investments.